Good morning, traders and investors. Thank you for tuning in. Welcome to May 1st, 2025. Got a good little lineup here for you in the heart of earnings season. We're going to go over some of the good and some of the bad of the earnings reports. Of course, Microsoft, Meta, Hood. Going to talk a little Eli Lilly. Dennis has been tracking this QQQ non-tech algo. If you're in the STN room, you know about it. GM cutting their guidance. They had earnings a couple days ago, but delayed their conference call, and they did cut guidance. Shares higher, though. We're going to talk about a little bit about Aura Innovations and Christian tracking an odd stock that you might want to tune into. Heads up, we do have Jobs Friday tomorrow. We're going to be getting jobs data from the Bureau of Labor Statistics at 8:30 a.m. sharp tomorrow. Our guest today at 8:35 a.m., Jim Tassoni from Armor Wealth Strategies. Always one of our favorite guests to have on. Folks, let's get it kicking here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Christian Fromhertz, how is your morning going?
Good morning, guys. Good morning. How we doing? Happy Thursday morning. I'll give you a quick rundown of what the markets are doing this morning. I'm going to just start with the international markets just to take a look at what's going on there. European stocks not catching the rally this morning. They're basically unched. Euro stocks 50 right now flat. The Hang Seng and the Shanghai markets were closed overnight, and the Nikkei was up 1.1%. You've got some really interesting moves going on here in the commodities market. I'm going to start with crude. Crude is down 2%. You could see what's been going on with crude. It is breaking down and is making a new, almost a new 52-week low. There was a lower candle there on April 9th, but you could kind of see what the trend is doing right there in crude, which is lower. Nat gas this morning is in the other direction, up 1.8% this morning. Here's another big one, guys, this morning. Gold. Look at the breakdown in gold. I've been talking about this one for a while. I know we've got a lot of stuff to get to, but I'm telling you, I was looking at this possible head and shoulders that's playing out here. I'm just going to bring up GLD. You could see this trend line that I've got drawn. It kind of gave a left shoulder head, right shoulder, and now breaking down here. So that's a big move down in gold this morning as more of a risk on market is causing gold to go down. Also, when we look at what silver is doing here, silver is down 2.7% this morning. Let's get over to the bond market. Bonds right now, I'm catching a little bit of a lift here this morning, up 0.3 of a percentage point. It's been so quiet, I think, in the bond market comparatively to everything else that's been going on. How about Bitcoin? Bitcoin this morning catching a nice lift here, up 1.9%. It's been moving in this tight little range over the last week and trying to break higher. Big separation in the indices this morning. You got S&P futures up 0.6 of a percentage point, almost 0.7 of a percentage point. Where all the gains are happening this morning, or a lot of the gains, I should say, are in NASDAQ futures, which, let me see. I thought this was up higher before. Maybe I got the wrong thing up here, but I see NASDAQ futures right now up 1.8%. Yeah, so something's not right here with my futures. But
That's right. That's right.
Is it?
Yeah, 1.87 on the Qs.
Yeah, but it's saying on for some reason I've got 0.8% on my my trading view screen, so that's why I needed to check that. And then you've got Russell futures, which are trailing. Interesting separation there, only up about 0.5% this morning. So, good morning, guys. Good morning, Dennis. How are you doing?
Yeah, doing well. I mean, you've nailed it, Christian. I want to go back to gold for a second. We're going to get to Meta and Microsoft, but I think what you're making is a very good, important point because all the ducks are kind of in a row here. And you can see, we had a vicious buy the dip rally yesterday. We worked 200 handles from where we were just yesterday, at around 10 o'clock. And this market is full risk on right now. And that is why gold is breaking down. Obviously, commodities can kind of sometimes move separate ways as well. But, we have completely changed sentiment. They are done worrying about tariffs for now. maybe it comes back into the worries, but we are past the worries about that. And this gold sell-off, Christian, which you just outlined very clearly, I love your chart, is just more confirmation that we're full risk on right now.
Yeah. Before we talk about all the earnings really quickly, do we want to talk about yesterday, just the reversal? I mean, from the reversal yesterday at 10 o'clock in the morning, basically price has not stopped going up, especially in the Qs. I just wanted to get your thoughts on that reversal yesterday, and then we can kind of get to the big hitters in terms of the earnings reports.
Let's jump in. I mean, obviously there were some big movers yesterday. If we just recap the action, the S&P futures were down substantially. We're down almost 2% at one point in time. And then, just buy the dippers start emerging and they can't stop themselves. And then they bought all day. Then we had huge buy imbalances at the close. It was the end of the month and they ripped it another 60 handles into the close. And then just to build onto that, we get Meta and Microsoft report after the bell, and then they tack on another 60 handles. So I mean, perfect, for the bulls. The bulls must have been loving it yesterday. You get the afternoon rally, you get the buy imbalances to drive us up into the close, and then you get the awesome reports from Microsoft and Meta, which drive the futures even higher. So, Christian, one, how were you approaching yesterday? Did you do any dip buying? And then two, what do we do now?
Well, yeah, I mean, it just very odd day yesterday with the PCE number coming in at 10 o'clock, and that was exactly where we kind of turned around yesterday. I did do a little bit of dip buying. I wish I would have been a little bit more aggressive with doing the dip buying, but I went to like my playbook and I bought some Netflix on the dip. I also bought some Palantir.
That's a
Palantir
nice one.
another deal out. I think they won another award. But I mean, talk about buying like the dip buying that's been going on in Palantir has just been amazing. So I took something that was like a little bit lower volatility yesterday, which was Netflix, which I like to buy that name on the dips. And I think we're looking at Netflix like it's an all-time winning streak, which no jinx on that because I'm still long a little bit of Netflix, but
Wow.
I mean, look at the look at the move in Palantir from the lows yesterday. Uh,
Yeah.
I couldn't believe that one. But yes, the buying the dip was vicious. I even had a short trade on going into yesterday. I covered some of it. I took some of the short trade off, but I didn't take the whole thing off. Joel was asking me about that yesterday, but really big moves and to your point, like I don't think like people have been able to kind of catch your breath. I mean that reversal was huge yesterday, and
Yeah.
then even into the close, and then right followed through with Microsoft and Meta doing a very good job for earnings. So
Let's jump into those reports here because first it was Microsoft that reported. Meta just reported just right after that. I'm going to give you the numbers here: 346 versus 322, 70.07 billion versus 68.43 billion. The sales guidance is higher, 73 to 74.25. Estimates were 72.28. I mean, that's a beat, and a slight raise, and the market just loved it. The market, like we were talking, there's a lot of stocks that got low bars coming in. I mean, really, when you give a perspective, Microsoft was down on the year. Even though it had rallied up recently, it was still down on the year. And, significantly off of its all-time highs, which were back at 468. Well, all of a sudden, just like that, we're not that far from all-time highs. I mean, this is an incredible move. The expected move on Microsoft was $18. It is trading up almost twice the expected move, up $35.39. That's pushing all the other stocks with it here. I'll give you the Meta numbers too, and then Christian can break down the technicals on both of those at the same time, because obviously both these companies reported and both have moved the market substantially higher. Meta also reporting good numbers, 643 versus 521, which is a huge bottom line beat. 42.31 billion versus 41.39 billion, so beat on the top line as well. The estimates for sales were just in there, 42 to 45 and a half. Estimates were about 44. But I mean, the huge bottom line beat really drove the bus here too, and the guidance is fine. So I mean, now you look at Meta. Meta's expected move was 39 points, not quite there to the expected move, but not far from it. We're up 36 here right now. These are huge moves here. Like I was talking about, if there's a dip, I thought, that these stocks would get bought, but there was no dip to be had at all. These both ripped right on the numbers and never looked back.
yeah, I mean the funny thing too is well, not funny thing, but the way that that Microsoft does their guidance, they put that guidance out at during the earnings call, which started at 5:30. So they kind of, that was that second leg that you saw last night, which was right here. They announced that their guidance was going to be decent, and you get a nice kick up here further in Microsoft. So I think the based on what my thought was is that and based on, like, I did not play this name for earnings. I haven't traded Microsoft in a long time, and I think that kind of just goes to the overall, like, consensus or being a contrarian, because it just hasn't, like, I haven't really found a lot of, like, alpha in trading this name. But that means, like, hey, folks maybe had the same opinion as me and said, I'm going to wait until what they say on the earnings, and maybe their the expectations were a little bit too low, and there you go. So where are we trading here pre-market? We're up to like 430. So I do see some resistance up here, which is right around like 431. So this is the crazy thing. That big of a move, and you're still going to have to get through some overhead supply here around 431. But hindsight 2020 here looks like a double bottom into effect, and a breakout of that double bottom, or even like a W type pattern. And you're going to push now to 431. That's really the level to watch. And then I would also watch the 435, 436 level. What I also noticed, and we can kind of go through the technicals here in Meta too, but similar type pattern, maybe like some type of like W type pattern, double
Yeah.
bottom. And where are we moving here? 580 right now ish. So let's go back to the daily.
586.
Yeah, so that will get you right back to about the 200-day moving average. So I would say keep it simple here with Meta, and maybe use that as your stop if you like Meta here and you're not in it and you want to get long. Use the 200-day moving average as your stop. I think that'll be a great area to basically watch. And then I see some more resistance over at 606. What I found very interesting was, as they talked about AI demand, you really saw a big move in any of the AI names yesterday after this. So the implications for these two companies,
Yeah.
obviously, they're a big chunk of the Qs, which you were talking about shortly ago, but they also affect all the AI companies.
Yeah. I mean, Nvidia is trading up $6 here right now, or $5 in the pre-market after a nice reversal day yesterday off of the lows. Amazon is ripping off of obviously Microsoft Cloud. It is trading up another. Amazon's trading up another 7 points here this morning, so it's up 4% here. I mean, and then in the smaller names, they're all trading higher here too. So what you have this morning clearly is going to be a tech morning. Like, at least at this point in time, unless there's some violent reversals, this is going to be a tech morning. So when we start adding it up, this is ramifications for everything here. Like, you come on and you say, oh man, S&P's up 70. I'm going to make some money on all my stocks. You're going to make some money on your tech stocks, and it depends on which tech stocks they are. There's going to be a lot of stocks that are going to be red today. Why is that? Because when we do the math, and all this ETF arbitrage is all just about math, Microsoft is approximately 0.55% of the S&P gain, and Meta is about 0.15. So when we add those up, actually just Microsoft and Meta, not talking about any other stocks, not even considering the other 498 that are in the S&P, is over half of the S&P gain. Then you put in Amazon, and you put in all these other AI names, Nvidia, and you put in all these other tech stocks, and you can clearly see that S&P 500 being up 70 handles is almost entirely, if not more, all tech. That means they're going to be selling other sectors to make up for the difference. And, I always talk about this QQQ algo, and I talk about, like, okay, well, if they're buying tech and they're buying it that heavily, if the indices aren't up, 150 S&P points, they're probably going to be selling those non-tech components. And we have seen that happen this morning. T-Mobile is down $3 trying to make up for it a little bit. I mean, you can just go through these components. Gilead's down $1.50. If you go into the staples are all down. We know oil's down. You already covered that. But don't be surprised if there's a lot of stocks that are actually red here today. So the breadth is probably going to be actually pretty poor on the S&P, I would think. I would think it's possible you could have half your stocks actually be in the red today if we stay where we currently are. And to Spinner's point here too, just to add one more, and then I'll let you go, Christian, is Apple is trading down here as well. And we've seen this before. The markets, you can tell, are starting to normalize, because we have seen this before where Microsoft goes up and they take the money out of Apple to try to make up for some of the difference. And there was a headline on Apple as well, some lawsuit with Epic Games or whatever. So, maybe that was an excuse as well to sell Apple. But Apple is down here today, down $2.60, which is moving counter to the overall market. Netflix down as well. So they're trying to look for other things to sell to make up the difference.
Yeah, you've definitely have some different, some interesting moves, and I think a lot of that coming also with earnings too, as some of these names get beaten up. You mentioned that you did a nice little trade in Lilly, which is selling off pretty decently on kind of a double hit. Number one, they reported earnings. And second of all, there's a CVS story out this morning too, that they are covering, I believe, Wegovy versus the Lilly product.
Yeah, so multiple, ramifications here. So one, expect some sectors to be weak, and definitely drugs are going to be weak here today, especially off the Lilly, which maybe brings us over to that, and we can come back and cover some of these other tech stocks. But you've brought us over here, Christian. I think it's a good segue here into the Lilly earnings, which I will give you right now. I'm telling you, last night, and if you show the chart, I don't know if you can show last night's action, Christian.
Yep,
there
right
was
here.
some iceberg buyer in Lilly that was fully convinced that Lilly was going to blow it away and the stock was going to go up like 100 points, because they came in, they were buying 905, 907. That's up $10 from the close. And it was an iceberg, 100 shares, and you'd hit it and wouldn't move, wouldn't move, wouldn't move, wouldn't move. They came all the way up to 918 last night, trading up 19 points ahead of the report. And I bet you that person bought like 20,000 shares up there. That 100 shares just kept trading and trading and trading and trading and trading. And I'm like, you know what? We've talked about this in this room. Christian has talked about this. Jay Rice has talked about this. I've talked about this, saying that stocks that are trading up near their 52-week highs have not performed well in this earnings season. And I'm like, you know what? They're giving me a 20-point lead on this thing, 19-point lead. So I did short some stock. I actually shorted a little bit at 907 last night. Then I shorted more at 917. And the stock kept going at 918. I'm like, you know what? I think even if Lilly beats, I'm not sure it's going to rally that full, amount. And they're giving me 19 points already at the expected move. Well, you come in this morning here, and they don't, I'll give you the numbers here. So a gift from the trading gods last night it was, because LLY is now reported earnings 334.302. So it was a nice beat. 12.73 billion versus 12.67 billion. Nice beat on the top and a nice beat on the bottom. The guidance was light. Don't want light guidance when you're trading 40 times earnings. So EPS 22 to 23.55 analyst estimates, and a little bit lower than that. It's kind of confusing. They give us two ranges, so you know how they do all the range thing. But the guidance was just slightly light. So slightly light, not good in this environment when you're trading with a premium multiple, especially when you go into that report with the high bar that Lilly did. So they pull the rug out from under it. So then I'm like, okay, well, I'm short the thing. So now what? Well, you go automatically, you want to know your expected move. The expected move was $46. So I'm like, okay, so basically 850 probably gets you to the bottom range of that expected move. So I actually bought in a little bit early at 871, and then I bought the rest of it at 851 and got the rest of my order covered perfectly, pretty much just looking at the expected move. So Eli Lilly, I probably couldn't have traded that better. On some of the shares, I took basically 70 points out of this thing, which is unbelievable because the stock is obviously only down 43 right now. So yeah, just that bar, just that trade, Christian, about being short stocks, strong stocks into the reports continues to work.
Yeah, definitely continues to play out. It's a theme that we've been talking about since the middle of last week, I believe. Lilly, right now, I would watch this 850 level. So nice little check back here. And if this is a name that you like, I would watch that level because you do have a nice dip into this. And yeah, here's the daily chart. I mean, you could see this thing run into the earnings report. So great point, great observation, very nice trade. Let's get over to
Before we move, I got
yep,
one more too, just
go
sticking
ahead.
with this high bar, low bar theme. So I not only did Lilly, I was like, you know what? We're going to have our, because you already knew this. You have this information last night. Meta, Microsoft are ripping. The Qs are higher. I can see there's weakness in non-tech. I'm like, this is not going to be a day for McDonald's. I'm like, it's not going to be a good day for McDonald's to report. One, McDonald's, it's the same setup. It's sitting up near the highs. Two is it's going to be a non-tech wreck is what I was thinking. Like non-tech stocks are probably going to be down. So I'm like, I love that setup. So I actually shorted McDonald's last night around 7:30 last night into the report as well. I had to actually pay down for this one. So I don't like doing that usually, but I ended up shorting it at 318.90, which was down 70 cents from the close. But that's how much I wanted it. So McDonald's comes out with earnings this morning, 267 versus 266. 5.96 billion versus 6.09 billion. So a beat on the bottom, but a miss on the top line. But I already had in my head that I think they're going to hit it. And again, using the expected move works. Expected move was $10. This stock this morning, I've already covered it now. This stock this morning got right down to the expected move and bounced off that area. It got down to 309 and change. So I mean, this is textbook trading, folks. What we've been talking about, just having your setups, ducks in a row. Stock's got a higher bar going into a non-tech day. Reporting goes down the expected move. I mean, it can't work up. It's like textbook setups here, textbook earnings trades. And people don't like taking stocks through earnings, but when you have an edge and you've identified an edge, you got to extract that edge and extract that alpha from people who aren't looking at that stuff.
Just a little bit more details about their quarter. I always look at the comp sales when you've got like a restaurant or a retail company that puts out the numbers, because I find that interesting in terms of expectations. Their first quarter comp sales come in -1% versus an estimated plus 0.5%. When you break it down in the U.S., the U.S. was actually weaker. U.S. comp sales down 3.6%. And estimated we're supposed to be -1%. I like to cover different when you've got more than one company reporting in the same group, as we just did with Meta and Microsoft. You also have Shack. Haven't really heard too much about this company lately, but they come out with numbers that did they give? I don't see their monthly numbers, but it says they see full year 2025 same Shack sales. Tongue twister, up low single digits. It looks like their numbers were pretty decent. Let's see what else. Second quarter revenue 346 to 353, estimated 356. So a little bit of a miss there, but stock not reacting too much, and it seems to be hanging in there. This is another one where I think this one is not the same type of price action in terms of coming into the report, more so on the lows, and therefore, to Dennis's point, not really selling off as much. So if it was at the highs, maybe it would be selling off a little bit more. But there you go, Shake Shack, and I will put a personal note in here. I do like Shake Shack over at McDonald's, but that's just me.
I love the burgers at Shake Shack. I don't like the price. If the burgers were like price at McDonald's, I would eat all Shake Shack burgers. They are awesome. Awesome burgers. Love the milkshakes. Love the food. Just too expensive for me. So many other companies that reported. We want to go to Robinhood from last night here, Christian,
Robinhood.
because I know we can
Yep.
go anywhere. You had a really good trade in Robinhood here last night. And you had a setup too. And I mean, this is what this is all about. It's about having your plan before. So when you execute, you can go. Like that Lilly trade that I made, that money on was because I had a good setup. I had a plan. I already had in my head stocks trading with a high bar because it's sitting up near the top. So in all, there's a higher chance it's probably going to go down on the earnings. Robinhood, you had a plan for this one too, and I'll give you the earnings and you can break into your trade here, Christian. Robinhood did beat 37 versus 32, 927 million versus 922 million. So be on the top, be on the bottom. Stock got hammered. Stock was down at one point in time, $4.50. And I was looking at that too and saying, wow, it's a nice little dip on Robinhood. You looked at the little Robinhood dip and struck, Christian.
Yeah, and this was the plan. I mean, this is what I wanted to do in terms of the earnings names, and we did go over this. I went over this with Joel yesterday, and that was my plan. Is like, hey, I'm going to buy the dip in Robinhood if we get a dip, and I thought that the expectations, some of these stocks. The expectations are just a little bit like too high in terms of the sentiment. I thought Robinhood was one of those names. So I thought regardless of like what they were going to say, kind of like a similar effect, just the expectations were a little bit too high. I don't think that there was anything really too bad or negative in the quarter. But the reason why I wanted to buy Robinhood is because we're just seeing the market has changed a bit the last couple weeks, and to the point about the overall market, it was heavy buy the dip yesterday, and I kind of just think that right now in the growth names, the loved names right now, and this is more of a retail type trade, that you're going to see the buy the dip mentality. Hence, Palantir down yesterday too, bought heavily. So
Yeah.
that was my plan. I didn't catch the absolute low, but I got in right around 47 and a half. And this is a nice, like, I want to actually stay positioned in this stock. I think the stock at this point could run up to, or where I would be taking more profits would be around 54.70. So that's my kind of intermediate type price target. But we could go over the numbers there too. But I thought just overall, like, what do you think too, Dennis, about like this being kind of the stock to own in the financial, like more of like we talked about with some of the names that reported yet. Maybe that was 2 days ago with PayPal and Square, and I thought, hey, this is more of the fintech company that I want to own going forward versus like your PayPal type stocks.
I love Robinhood. I love everything about it. I think Vlad's run the company well. They are on everything. Like, I mean, even trying to get into the sports betting a little bit too. They get into everything. This company's really smart. I wish they could short stocks over there, but I tell you, they do everything really, really well. Valuation, not that bad when it was down at 30. It's starting to get high again here at 51. And I do think there'll be more dips to buy, but I had this on my shopping list. I bought it a couple times. I had a good trade from it for 40 to 45 or something. Wish I would have struck at 30, but I tell you, they do everything well. I love this company. This valuation has always kept me out a little bit, but even when we were really selling off there, the valuation actually started for the first time to actually kind of get a little bit attractive. I think, if I look at it now, Robinhood, and, I always like to put my value cap on because in the long run, I still am a value manager. It's 36 times forward earnings up here, which is a little bit expensive because you look at its peers, and its peers are trading 12, 13, 16, maybe in the case of IBAK are a little bit higher at 18 or 19 earnings, but it's almost twice as much. But when it was down at 30, it got down to like 24, 25 times earnings. That's about as cheap as Robinhood has ever been. So, I mean, I don't know if you're going to get another shot back down there, but if you do, I think you should be striking. That's an unbelievable move it's had here in the last couple of weeks. So it's hard to buy a stock goes from 30 to 51. I mean, we still have some uncertainty here, but man, can't argue with the people who bought the dip. Good job.
Thank you. And I think also, I mean, if from time to time we are going to get market dips like we had yesterday, have those names that you want to buy that you think are going to be a little bit more resilient, or that, that you think can kind of recover type quickly, or names that you want to get into for more than just, a day trade. And that's kind of my thought on Robinhood. I think they are hitting on all cylinders for the younger demographic, putting in the betting markets, also coming out with now like credit cards, having a good interest rate. So they're kind of, they've really hit that demographic really well. It will be interesting if they can kind of spread a little bit to, not just the younger demographic, but if they could start attracting some of, some of the different, classes of folks, I think will be interesting. But I think they're kind of just hitting all those segments that they need to different product segments that are getting people excited. And I know that you use them quite a bit too for, looking at where prices are trading after hours. I mean, they're
that
really the
24-hour market they came out with was genius. I mean, absolute genius. They were the pioneers there for it, and the 8 to 4, and they figured it out, and they got obviously the market maker in there to do it. That was just genius. And then IBKR piggybacked off it, and Schwab and everybody else is piggybacking off it now too. But that was a genius move. I mean, Vlad is an innovator. Think about everything he's done from, the free trading. Like they are at the cutting edge of innovation all the time. How do you get somebody that has run a company better than Vlad? I mean, I know a lot of people hate him because of the whole GameStop stuff out there, but that was really out of his control. At this point, if you just want to buy like good companies with fantastic management, Robinhood fits that bill. Now, again, I'm not buying after just ran from 30 to 51. It's like, this is the time I think you're ringing the register. But, I think it's on your shopping list. Gets back down near the 40s. Maybe we have, a Trump dump here again at some point in time. This is a stock that I would like in my long-term portfolio just because it's run awesome. Couple more earnings here. We do have Jim Tassoni going to be coming on here. We do have jobless claims that just broke here as well. Don't see much movement in the S&P futures from that. But if we start moving, we'll let you know. Actually,
I
we're
don't
looking a
have the
little bit.
jobless claims. Do you? I don't see them out yet.
They are
There we
just
go.
coming out here right now.
There they are.
We are leaking. We are leaking on them. I'm
Right,
getting
so
filled
here's
on some
this
stock,
number.
so I know
This
we're
is
leaking.
what did we get here?
241 and
241. I'm having difficulties this morning. I don't know what's little tech problems, I think, this morning.
no problem. Yeah, 241 versus 223. So slightly higher on initial jobless claims than we expected. Does that make the Fed have to cut interest rates? That's what they're hoping. TLT, always what you want to look at on these numbers is you go straight to the TLT, is ex-dividend today. So the adjusted closes at 89.14. It's actually trading up 41 cents here right now at 89.61. So we're up a little bit on the TLT as well. Stocks leaking just slightly.
Well, that's the first time I think that we've really kind of seen a deviation in the in this weekly number. So that number does come in higher than expectations, and the market is moving a bit on that. So maybe looking for a reason to take some profits this morning too.
Couple others.
It
Jim,
was a little
coming on
odd.
here in 3 minutes.
I saw it.
Go
It
ahead,
did
Ben.
look like the numbers were delayed a little bit. Just kind of
Okay,
weird
not
to
just
know.
me.
But real quick, the continuing claims were 1.9 million. Expectations were for 1.86 million. We've been watching that continuing claims as a potential gauge for a recession, at least according to Blue Putnam. Just wanted to mention that real quick.
There's also a breaking. I know we got a few different headlines here. Hassett says tariff news expected by the end of the day. We'll see if that means they actually have a deal or what that means. I have a quick question for you, and then I know we've got a lot more earnings reports to go through. I know Jim is coming on very shortly too. But do you think at this point, once the actual deals get announced, right, if they make a deal with India or whoever first, that it's actually a sell the news event?
It's a great point because we have talked this up so much. I'm going to go with yes. And what I think the initial response will be, we'll rip like 50 handles or 60 handles on the deal announcement, maybe even like 80 handles. It'll be silly because the algos don't think about that. They just buy. Oh my gosh, a deal. Who thought a deal coming? We didn't see a deal coming. The algos would buy it up like that. I think that actually that rip that we get on the deal announcement will be a selling opportunity. I'm with you, Christian. Great point. Great point.
Yeah, it's just something that I started to think about because we have seen a rally, obviously over the last week or so, and the expectations have gotten higher. So again, it's always about the expectations, and one of the biggest traditions in Wall Street is buy the rumor, sell the news. So I'm starting to think about that a bit.
So let's bring Jim into this conversation here. Jim Tassoni coming on here. We got our guest intro. Let's. Mr. Jim Tassoni, CEO, Armor Wealth Strategies. How are you doing here today?
Well, it's cold and rainy here in West Michigan. And for anyone who's been leaning bearish, the last week's been kind of cold and rainy too. So I guess
that's true.
It's apropos.
That's true here. And obviously, if we get them right, we get them wrong, Jim. I get stuff wrong all the time. I get it right. I wanted to just know, because obviously you came on last week, you were leaning to the bearish side. You get this rip roaring rally here. What do you do? Like, do you just looking at it? You just say, okay, maybe I got this wrong, or do you like tell me what you're thinking now here, because we've had a significant rally here in the last week.
Yeah, and it's not fun for somebody who was leaning bearish, and I know I'm not the only one. And like you said, you get some right, you get some wrong. I haven't given up on this trade yet because, again, always a slave to my levels and always knowing kind of second trade first, knowing where I'm going to get out before I get in. And when we talked last week, I said I put on a half size position, short SPY 544. Said if we creeped back up to 555, I would put on a full size position. So that's what I did. When we got to 555, I am now what I would consider a full size short, and it's a pretty good size short too. Well, I will say it's it's roughly in my trading account, my trading strategy. It's roughly about a 20% position right now. So it's a rather large position, but I've got to stop up above 567.50. That's the level I think we need to get to, at least in what I'm looking at, to convince me that this rally is more than sort of a short-term bounce, counter-cyclical. And so if you look at that, I mean, my cost basis is around 550, 549-ish on this trade. I'm willing to risk, that $18, $19 on this trade. It's been good. I've had a good luck with this so far this year. We talked earlier this year when I put that June 550 put on when the market was at all-time highs and it was significantly lower. I mean, that was a home run. So I've got some profits to play with. Who knows how this trade's going to work out, but that's still how I'm positioned at this point.
I love that you say you're a slave to your levels. And I mean, if and I'm no good at this, I keep adjusting on the fly. I'm always adjusting on the fly. And sometimes it's good for me and sometimes it's really bad for me. But I love the fact that you come in, you outline the trade. Look, I'm shorting here, my stop is here, my target is here, and let's go. And let's ignore the noise in the middle.
Yeah.
Because that's done you very well. You've been successful for a very long time here at Jim. And I mean, sticking to your system, even when it's not working, is usually a recipe for long-term success. So I love that you stick with it. The problem with me is I break my systems half the time when I trade so much on feel. I'm like feeling this, feeling that. And like I said, sometimes the feel will knock me out too. So one, how do you stay convicted, in your thesis, to ignore your emotional aspect of it? And then, and then that's basically my question. How do you separate the emotion out, when you're watching these markets trade like this every day and going up on you, to stick with your system and to stick with your levels?
I definitely can't say that I'm emotionless because I definitely feel it. Like I said, the last week has not been fun to watch the market basically go straight up 7 days in a row in my face. I mean, I am fortunate, like we all trade. I mean, while I will take reasonably sized positions when I think it warrants, I'm never all in on one trade. So I'm not betting the house on that trade. So
yeah,
I do have longs in other places. We've talked about the international and emerging markets that are offsetting some of that pain. I've had a short in oil that's offsetting some of that pain. But as far as it goes, a lot of the way I've traded, and I used to try to be a little bit more of an active trader. Dennis, you're one of the best I've ever seen. And I mean that in the short-term day trading and your feel for the market. That's just not me. I don't have that skill set. So I like to put a trade on. If I have a target, I'll set the target. If I have a stop, I'll set the stop. And then I leave it alone. I don't sit in front of the screen, biting my nails, watching every tick, watching the trade bounce around. Because if I do that, I'm 100% like you. I am more than likely going to adjust things, take profits too early, get out of a trade right as it's about to work. So I've learned over 20 plus years, put a trade on, stick with it, have conviction in what you're doing, know that over the long term, you've developed a system that has edge, and let that edge play out over time. It's not going to be on every single trade, but hopefully over time, you believe in your edge and you let it play out.
Hey, Jim, so this is kind of interesting. I've had the SPY chart up here, and I guess it's kind of a question for both of you guys too. But we're still like technically, my level that I'm watching in SPY is right around 560. It's 559.70, and also price is still below the 200-day moving average. And I use this phrase all the time that nothing good happens below the 200-day moving average. Yeah. So we're still not above there. I mean, I think that's something to kind of like a point to remember, and also like a point to think about, like your trades that you have on, for anybody who's been adding risk. I mean, I continue to kind of point out, like, one of the first things that I do when we enter the week and I do analysis over the weekend is, hey, whether the stock market is in an uptrend or downtrend. So I don't think that there's anything wrong with kind of still selling the rip while we're in a downtrend. I mean, we'll see where we get here with Qs. I mean, Qs are going to be, maybe pushing into that 200 200-day moving. I think that's the next thing to watch, because I think we're getting above the 50-day moving average, which I pay attention to, because I know institutional traders who don't do a lot of technical analysis will look at that 50 and the 200-day moving average. But I don't think that there's anything wrong while we're doing that. And of course, like, earnings have complicated things too, because we've gotten some better than expected earnings. But I just wanted to kind of mention that point. And I know that you've been looking at commodities as well.
Yeah.
I like that trade with shorting crude. I mean, I think you've got a nice move that's going on there. But are you guys still, like, Dennis, are you still in the sell the rip mentality?
Yeah, I'm still in both. So buy the dip and sell the rip. And that's kind of how I came into 2025, was my sentiment coming in. The fade was my acronym, meaning fading both directions. I thought we'd be sideways overall, like just dropping and going nowhere. And then the tariff tantrum happened. And obviously we sold off substantially. But I still think we're in a contrarian's paradise. I still think we're seeing it all the time. Even, if you're chasing like a couple days ago, then we have like a 150 S&P point sell-off yesterday. And I mean, you're bringing it all in, and then, you have the 200-point rally. What's going to happen tomorrow? What's going to be the next, tariff headline? Or are we going to get a deal, no deal, all this kind of stuff going on. So I still think, like, I'm not only just selling the rip, I'm also buying dips. So I think this contrarian's dream market here right now.
And I 100% agree with both of you. And I think if you were a better trader than me and you were able to, whether you were in cash or you took the pain or you were short and you flipped, if you got long down in that 490, 495 range on SPY or any stocks down there, again, and it's all dependent on your time frame, but after a 7-day rally coming up into what I believe to be some congestion areas here in that 560, 565, 570 level, I think it's only prudent, especially if you're a shorter term trader, to probably take some money off the table here. I'm not saying you have to be as aggressive as me and take a big short position, but if you were good enough and or lucky enough, because we all get lucky at times, to catch that bottom back a couple weeks ago, I think it's only prudent, again, unless you're just dollar cost averaging for the long term, to look to book some profit here.
I think so. I think you got to stick still with the sell the rip mentality. I mean, Christian's done this great all year here as well. I think it's just a trader's, like, it's a tough, like, you think about it as a long-term investor, and I am a long-term investor as well. And I look at my long-term portfolio and I do adjustments. I've had some decent, long-term trades that turned into short-term trades because they had ridiculous moves. But I mean, overall, my long-term portfolio is just kind of just sitting here this year. It's just leaking a little bit, down a little bit from where the year started. As a trader, I'm having a great year trading. My trading count's way up this year. And that's just because, we're extracting the alpha from all the ridiculous, volatility that we've had. So again, trader's paradise, not so much, kind of like an investor nightmare to a certain extent, though. Although that nightmare is starting to get a little bit better in the last couple of weeks. Yeah,
absolutely. And for me, it's, in my investment portfolio, my retirement accounts, which, it's not quite as far away as it was, at some point. All of a sudden I'm looking and I'm like, wow, these retirement days are coming faster than I thought. But with that being said, yeah, if you're a long-term investor, I mean, I'm always, when you have the opportunity, I mean, when I look to how much money I'm putting into my retirement accounts, I do it really simply. And I think as much as we all sort of bash Jim Cramer, I think he might have been where I heard this a long time ago, and I've done it for a long time. If you're still putting money into your retirement accounts, I divide it up 1/12. So I put 1/12 in every month. If the market goes down more than 5% in 1 month, I double it up for the next month. And then I skip the following month. So I'm a definite buy the dipper in my retirement account, but the trading account's a different situation. So I think I did hear that from Jim Cramer. So as much as we like to hate on him, and he's a wonderful contrarian indicator for a trader, he did give me that idea maybe more than a decade ago, and it's worked out well.
That's a great point. I wanted to ask you too, as well. I think one of the last times you were on, you talked about that you're still long some international areas.
Yeah.
Any particular areas that you like right now? The move back in I don't think we've talked about this too much, but the move back in some of these European areas have been vicious. I mean, you had a V recovery in Germany. Germany's back to new highs.
I know.
I mean, so severe and probably not getting the attention that it should. And you're also seeing this in European financials. But what are you looking at in international markets in particular?
Yes, still along those European markets, Germany, the EU, the UK, which have had, it was, you almost blinked and you missed it in terms of that, that sell off and then the rip roar and rally back. So that's helped, stem some of the pain, as I said. So I'm still long Germany, still long UK, Europe, still like emerging markets. I traded out and then got back in, but still very positive for the year on my China trade. We've talked about Brazil for a while. That's been a great market. I think that's up like 20% this year. So compared to, what's been going on in the US, that's another good one. Even looking at things like Mexico, I mean, Mexico has been strong. And the other one that I keep trying to, play, it's an interesting one, but you've been able to catch some, if you've been a little bit shorter term on it, is India. That's another market that's presented opportunities at various points. Little more volatile, not quite the straight up and to the right move, but that's been another good one, especially off the, April 9th, April 10th lows. If you were fortunate enough to get long there. I was long before that, continue to hold. So I'm probably my most overweight I've been in emerging markets in 5, 6, maybe even 7 years. I really like that trade right now. I continue to hold it, and for now it's working.
Well, it's interesting too, is a lot of other parts of the world are cutting interest rates. That's just
Everywhere.
happened recently in Europe. They're down to 2.5%. Our Fed funds rate is 4.5%. They're down to 2.5%. They're cutting, and they've been doing it pretty, steadfast. And I think that's one of the catalysts of why you see, Germany out to highs. So it's very interesting to see. I know that we're all fixated on the headlines and headline risk with the tariffs, but the other thing is central banks around the country have been basically, not everyone, but a lot of them have been cutting interest rates, which is good for stocks.
Yeah. And a lot of people, it's been such an S&P 500 driven world for the last, 15 years. A lot of people forget, we had that, what I'll call that lost 13 years in the US markets from 2000 to 2013, where basically if you invested in 2000 and then looked at your portfolio or your account and you were just in the S&P 500 in 2013, you went 13 years without going anywhere. But at the same time, you had things like international and emerging markets that exploded, that gave you great returns during that, 10, 12 year period. So I remember getting started in the industry, and it's kind of funny, just the timing of when I got in, which was back, in the early 2000s. And that's all anybody wanted. Find me an emerging markets fund. Find me a small value fund. Like everything that people have thrown out and never want to invest in and never want to talk about. And long term, the market is cyclical and it will move in cycles. And I don't know, people have been calling for value, they've been calling for emerging market, and they've been wrong for 10 years. But if we're seeing a bit of a shift here, at least it makes sense to include that, in my opinion, as part of your portfolio, whether it be trading or long term.
It's just getting more diversified, maybe just a way. And I look at my own stuff, and I'm very U.S. centric in my long-term portfolio. I got all the U.S. tech stocks. I'm basically full of U.S. tech. So that's what I was trying to do just over the course of this year, is rebalance a little bit internationally here, just looking elsewhere. Because we saw in the first couple months of the year that you can see significant, gains, elsewhere despite U.S. weakness. And that's the first time we've seen this for a long time. It's always been U.S. best place to be. So, I mean, if you just started investing in the last 5 years, you're like, why in the hell would I invest anywhere else? But like you said, there's been periods of time when you get back into 2000, 2002, 2003, where the U.S. was a mess, but other markets were performing well. So maybe, Jim, Is that this time again? Like, is it possible?
Yeah, it's definitely possible. And like I said, you always think, it's like you talk to somebody in 97, 98, 99, and it's like, why would you put your money anywhere but the NASDAQ? Like it's up, 80% a year for 3 straight years. How could you be so foolish to put your money anywhere else? And then things change. And that's why, again, and I know we're getting a little longer term here, and it's not necessarily, what the audience tunes in for.
I
but
think they like that too, though.
But in your longer term portfolio, I think it makes sense. If you came into this year, you rebalanced at the end of the year, you had some international, you had some emerging markets, you had some gold exposure, you had some fixed income exposure, you're probably sitting green for the year, maybe slightly negative, but you experienced a whole heck of a lot less pain than you did if you came in long the 7 mag stocks.
Well, one more just before we let you go here, Jim. Just finish with gold because GLD, Christian was showing very well, nice chart there, and just earlier in the show, we've kind of broken down from 300 area here, at least if you're looking at GLD, and it's starting to look weak. And this is obviously a classic risk on, risk off trade, so it's kind of giving you more fuel in that. Hey, maybe this risk off. Is this another dip here, Jim? Is there a place to buy gold on this dip, or is this like just been too much and now we're like going to deleverage this gold trade a bit?
Yeah, for me, and we talked about it last week, the actual GLD trade, I took my chips off the table at, and I have the exact level here, at 306.90. That was where I exited this trade. I said, I've held this thing. I got long this originally back, in early January in my trading account. And it's one of, if not the best trade I've had this year from a size perspective. Nice. And I just thought it was, it had run. We saw a little bit of a blow off top there. Then we saw some consolidation and some breakdown. Unfortunately, what I did, and this is sometimes, you want to talk about a weakness maybe in my trading that I recognize, but have still yet to fully correct, is I didn't take all the position, but I took a portion of the position and I rotated it into GDX on that pullback. I bought it at 48. I thought we may have some catch up there. I still wanted to be exposed to gold in some respect, and I still do. I still want some exposure there. But I thought maybe I could play catch up in GDX a little bit. And I'm talking longer term. Obviously, this year, GDX has significantly outperformed, but longer term, it's lagged a little bit. So I thought maybe, if gold prices maintain up here, GDX could still have some upside potential. I was really proud of myself, patting myself on the back on a day like yesterday where gold's down 0.5%, GDX is up 1%. I'm like, okay, this is what I'm talking about. Now I come in this morning and get smacked in the face. I'm down below where I bought in. Still have my stop down at 44.50. Again, slave to the trade. I'll stay in this with my stop there, but I've definitely reduced my exposure. I'm out of GLD, still holding a position in GDX, but definitely not as attractive a trade as it was when we came into 2025.
We'll keep an eye out on these markets for you there, Jim. Thanks again for joining us this morning. Jim Tassoni, CEO, Armor Wealth Strategies. He comes on here every Thursday, and we will see you again next week.
Thanks, guys. Have a good one.
Thanks, Jim.
Thanks, Jim.
Christian,
do we want to talk?
Yeah, go. A lot of earnings.
Well, yeah, there's a lot of earnings reports. Let's talk Roblox. They're a
I don't want to talk Roblox. Please don't talk Roblox. Okay,
they just reported
Roblox.
a little while ago, about 8 o'clock. So we kind of missed them a little bit in the shuffle, but they come in, their bookings come in better than expected. See second quarter bookings, 1.17 billion to 1.19 billion, estimated 1.14. They jump about 7% on those bookings. Again, more so about the bookings than and the active users, which come in 97.8 million versus estimated 93.2. So these like video game type companies are doing pretty decent. There's a nice move up to 72. I take it you are not long based on that reaction there, Dennis.
No. And here, so I've been long Roblox for a long time, and I talked about it in the STN room yesterday, and I'm like, man, it's had a big run. it has a 12-point or it had a 10-point expected move, and I was like, I just don't want to see all my gains go away. I'd bought it at 51 when Michael Pachter was on the show back in I think it was November, and it had run to 75, and then I watched it go all the way back down to 51 and all the way back up and then to 67 yesterday. And I'm like, you know what? I don't have a feel for this one. I'm like, the bar is actually kind of high because the stock has run quite a bit and it's not far. It's up on the year in 2025. And I'm like, just because I got that high bar thing, I was like, you know what? I'm just going to sell and take the gain. And then you see it up $5. Like, why did I sell it? But, I just didn't want to take it through the report. That was the whole thing. I think I still like, and again, to your point here, Christian, you've got these stocks, and we've been talking about the tariff resilient stocks. And tariffs are not going away here, folks. So some of these stocks could still be, good for this environment. Like Netflix, we have on that list. Spotify, we have on that list. The Spotify dip was epically bought yesterday and the day before. We had Take-Two on that list, EA Sports on that list, also Roblox on that list, on like the tariff-free stocks where they're kind of don't have much exposure there and work probably in a tariff environment. Roblox, congrats to the Bulls. I screwed this one up.
Well, I don't have any Roblox on either, so I'm in the same boat as you. But I do have Take-Two on, and I didn't want to double up with going long two names in the same kind of group. But
Gotcha.
you got a really nice breakout going in Take-Two, which has not reported earnings yet. But I'm trying to continue to ride the trend here in Take-Two. But Take-Two was one of those stocks that held in when the rest of the market was really good, really good point I want to make here is that Take-Two had some great relative strength versus the overall market. It was not breaking down when everything else was, and look at it break out to new highs here. So very nice. I continue to sit long Take-Two. Let's talk about a couple other names. I know you mentioned AUR as a name that I think had some news this morning.
Yeah, so Mark Chaikin pick, he's brought this to us obviously on pre-market prep before. He's brought this also recently to us in the STN room, just talking about this driverless trucking. And Aura has an official press release at 6 a.m. this morning. Aura begins commercial driverless trucking in Texas, ushering a new era of freight. So I'm just kind of diving into the details here. But anyways, to date, the Aura driver has completed over 1,200 miles without a driver. So, I mean, they're obviously competing with Tesla here, but this is a smaller, more speculative play, although I think they're still like an $11 billion market cap. So, this is not totally a spec here. It's kind of a bigger company. But you're getting a nice pop here, 6% this morning. I just wanted to highlight this because I know a lot of people were following this name, especially since Mark Chaikin brought it to us. It's been sleepy. It really hasn't ignited much. I actually would be disappointed kind of a little bit. You get this headline this morning, and they're trying to do, some launch here and to officially launch in Texas. And, it's kind of like a little bit of a whimper. It's only up 6% here. I thought it would get more love than this.
You got about 9% short interest in this name too, so we'll keep an eye on it. One other name I wanted to bring to your attention, guys, was a name that I saw a huge move yesterday on heavy volume, and I want a little bit of help from you guys if you guys know this name at all, if you have any personal experience with this company. It's called Oddity Tech. Right, look at the volume on this move, on this gap out to new highs. It is a newer name. Like this is a new, this IPO'd a couple years, I think a couple years back, or maybe it was last year it IPO'd, but it did clear all-time highs, which gets me excited because you got to break out, and you got to break out on really heavy volume yesterday. Look at that volume yesterday. If anybody knows this company or has dealt with it, let us know. But if you're not familiar with it, it's AI for personal products, which has been a pretty decent theme. If you think HIMS, which we talked about, I had a nice winner earlier this week, and HIMS kind of bought the dip in this one and it worked well. But HIMS is kind of on that new cusp of trying to come out with cater to like personal products for people that they can kind of get on their own. And it seems like this is another play, similar type play on that. But again, they're throwing AI in there, which is kind of interesting for personal care. But I kind of think that this could run a little bit.
Are you in this one?
I'm not in it, but I want to be in it. So
you're waiting for a dip.
Yeah, or you just kind of like have to hold your nose and buy a small position in this one.
AI for personal for personal products. I mean, can they even make me look good?
Of course,
no, Joel, that's impossible.
I just had to come in with some breaking news.
Oh gosh, what do you got for me?
I've had my worst morning since 1997.
What happened?
That's when Dana was 5 and Emily was 2. Our
What
puppy had ACL surgery on Tuesday.
Yeah.
We brought her home yesterday.
Yeah.
She has been howling for the last 2 hours,
Oh.
howling in her cage. So you
Oh.
remember I told you there's nothing worse than a sick kid?
Sick
A
dog's
sick
worse.
dog is worse
Sick
than a
dog's
sick
worse.
kid.
Is the dog okay? You got to bring her in, or what's up?
I mean, no, she had the surgery. It's just the pain and
Oh
you
man,
know,
that's
giving her.
horrible.
I know.
Can you give it
So
like Advil and stuff? Like, can you give it pain
Lisa
medicine?
did that. She tries to bite me when I do it. So I had Lisa do it. She was fine, and then Lisa went to work. But I got some backup. Emily's here for a few hours. I'm gonna hop over in the STN room.
Okay.
All right.
We were wondering where you were this morning. So yeah, okay. So
Yeah,
Joel's obviously.
it
Well,
was-
we
it
hope
was-
your dog gets better here, Joel. Obviously, you know, sick kids, sick dog. I always say you always say sick kids the worst thing, so sick dog's worse. I don't have a dog, so I don't have to worry about that. But sick kids is awful.
All right. We'll see you guys over in the STN room. Have a great day, everyone.
Yeah.
You too.
Okay, so we're just gonna give her